What's up, everybody? This is Brian with Where Rebels Are, streaming on Twitch. We talk about the market 4 days a week. Today is strategy session Thursday. We're going to focus on the different approaches to stock investing, day trading, swing trading, annual rebalancing, and then long-term investing in your portfolio. Compare that to examples in real estate to hopefully make it more accessible for everybody involved, and then break it down and take Q&As like normal. So let's kick it off, everybody. Happy Thursday. Thursdays is focused on strategy. So my choice for today's topic is breaking down the different investment approaches. And I came up with an analogy that I kind of shared with somebody on Reddit. I think it's fleshed out enough to share on you guys, so be brutal with your feedback if it makes no sense whatsoever by the time I'm done going over this. But really, I wanted an analogy to help people understand the different stock investing approaches, whether it's trading or long-term investing, what those look like, and who you are specifically as an investor if you're pursuing one of these paths. And the analogy I came up with was to just go ahead and try to align it with real estate, because even if you've never actually purchased a house or participated in the real estate market, there's a swath of programming out there, like on Home Garden Network or HGTV, or I think that's the same thing, but they talk about like the fix and flips and different things for real estate. So I think conceptually this should be pretty accessible and easy to follow. All right, day trader. All right, so where am I going with this analogy? When you're looking at getting involved in the stock market, there's hundreds of different paths you can take. You can invest in options, you can invest in ETFs, you can just invest in the stocks outright, you can decide to day trade, okay, buy, sell, etc., etc., etc. And all of these approaches have kind of different hurdles in front of them, but they also have different goals and objectives, and that's where I came up with this analogy. So as a day trader, first and foremost, I want you to understand that you need at least $25,000 of capital to get involved, okay? If you don't have at least $25,000, you get pegged as a pattern day trader. Your account gets locked because you don't have enough cash in the account, and you're kind of forced out of the game or not able to trade anymore. My personal guidance or advice is that if you want to get into day trading, you have at least $50,000 in capital. How does that kind of equate to a real estate broker, and why did I pick that? Because realistically, as a day trader, your goal is income, okay? That's what you want out of day trading. You want to be able to generate consistent sales leads, okay? And you want to keep going. So a real estate broker, to be a good broker, honestly has to spend money. You got to get your license, which is cheap, relatively cheap, and then you have to get an office. Sometimes you have to pay for the office yourself, or you have to have somebody else sponsor you and pay into an office. And then you have all of the access fees for different NMLSs, different portals. You can buy sales leads, etc. And then as a real estate broker, it's up to you to continue to follow on those leads until you finally get somebody who either wants to buy or sell a house, okay? Expenses for becoming a real estate broker: you're probably going to need a car. All right, you can't rely on public transit if you're going to be a real estate broker. You're going to, again, your license, your office, sometimes a wardrobe, sometimes a social media package, or a photo package, right? A lot of them use professional photos, not just of the properties, but also of themselves. So each of these things go into the cost of being a real estate broker. But at the end of the day, your goal is, after everything you've spent on, okay, your licensing, your transportation, your sales leads, that you make more money than you spent to do it. So as a day trader, you got still that upfront capital commitment of your $50,000 plus dollars that you have to put into the market, and your goal is to generate income off of that. Obviously, if you're spending all of your time day trading, you hope to make more than $50,000. Okay, a good day trade target that I give people, and I kind of run this and I say, if you don't expect to at least make this much off of day trading, you need to find something else. So $600 per successful day trade averaged. You get an average of 3 wins a week. Okay, and then you multiply that by an average of 45-ish weeks a year. If you're not making at least $81,000 day trading, it's not worth your time, or you're doing something wrong. Okay, but again, you have the capital commitment up front, you have a discipline, pattern, or routine. Okay, so a real estate broker is out there looking for clients, a day trader is out there looking for trading opportunities. But your goal at the end of the day is to have a transaction open and close, and then you make the commission or the profit off of that. So your goal is income, not to be independently wealthy. This is not a wealth building strategy. Can you build wealth off of that? Yes. Okay. A good real estate broker, if you're making $80K a year, you're doing pretty good. Okay. You're doing better because there are realtors out there that are making millions a year, 6+ million, just like there are day traders out there making millions a year. Okay. But it takes a different level of commitment. The person who's making $1 million paychecks in real estate is putting in real work to do it. They are leveraging systems. They are disciplined. They usually hire a staff to help them break those levels. Day traders are the same. Okay? Good day traders do pay people to help them research and find trading ideas. There's prop trading firms that open up. Okay? Prop trading is, I will give you, as a junior trader, $50,000, $100,000 portfolio, $200,000 portfolio. Here are the list of rules. If you break them, you're out. But go forward, trade, and I keep a big portion of the profits that you make. Realtors do the same thing, okay? And anybody who makes it up to that $1 million plus a year revenue has built it out as a business. So that's why I equate day traders to brokers, because again, it's about income. It can be built into a business, but introductory, your first couple of years, this is what you're targeting. Okay, and this means you're successful, because a lot of realtors go out there, they don't know anything about networking, they don't have any follow-up programs, they don't have any disciplines with getting their names out there or connections in the business. They don't make $80,000 in their first year. They might make $20,000 if they're lucky. Some of them make zero, big fat zero. Same thing happens with day traders. All right, so that's why I equate a day trader to a realtor or a real estate broker. Next step on the line is swing trader, fix and flip wholesaler. Again, you're also in the same exact market. You're just dealing with something different. So your goal is still income here. Okay, that's the whole point of it. You want to make money off of what you got. Fix and flippers can use other people's money. They can use their own money. Same with swing traders. Okay, you can use other people's money. You can leverage on margin. You can use your own money. There's different ways for that to be accessible to you. And your goal is to generate the income over a longer period of time. A realtor wants to spend all their time researching and then opening and closing a transaction. Same with the day trader. You want it to be one and done. Swing trader, however, you're willing to invest a little bit of time. Okay, so you research, you find something that's depressed in the market that has an opportunity or that's way overpriced that you might be able to short sell, and you're willing to invest your time into finding that, and then your investment is hoping that it will come to a point where it comes to a gain for you. I think Walgreens is a fantastic example. Walgreens, you're taking the house in the neighborhood that's good, okay? Medical distribution, supplies. They also do some retail selling, okay? Overall, it's a good neighborhood in the stock market. Not a lot of risks right now, a whole lot of money to be made, but for some reason, Walgreens is being depressed by the rest of the market. They're afraid, they have concerns, right? Look at this volume spike. That is a huge negative volume spike, which means people are pessimistic and moving out. So as a swing trader, you're looking for things that are like this. it's a good house. It's got good bones. You go into the financials of Walgreens, they're not going out of business. They're not. Assets, $20 billion as a company. Okay? $20 billion. So it's got good bones. It's not going anywhere. It's just people right now don't believe in it. And the same thing you're doing as a fix and flipper is you're saying, hey, this is in a good spot. Why is it so depressed? So you jump in, you're hoping for the arbitrage or the increase to happen, and you're not so worried about it needs to happen now. You're willing to put in the time waiting as a swing trader, or the work repairing or hiring contractors to fix it for you in fix and flip. And so this is a more patient strategy, but at the end of the day, it's the same exact strategy as being a day trader or real estate broker. You want the transaction itself to net you some sort of income. So still, goal is still income. Okay? Now, swing trader, fix and flipper, all right? Again, successful, you can pull off $80,000 a year. As a swing trader, all right, you actually have more flexibility, okay? You aren't required as a swing trader to put up as much capital, okay? So there was no investment as a swing trader to get your license. Fix and flippers don't need licenses. Wholesalers don't need licenses. None of that's required for an upfront investment cost. So your barrier to entry is a lot lower, but it's still related to how much you're actually putting into it. So if you're a swing trader and you start with, say, I'm going to give it a little more generous, $5,000, okay? And you're successful in leveraging that a couple of times. You pull your first time of, let's say, 30% return on your first one, $6,500. You get another 20%. All right, so that's 2 trades, and you project that out for a year. Let's say full 40. Maybe you pull or double your money, your investment, $10,900. Maybe you get a $20,000 a year return. Okay, fix and flipper is going to be the same thing. All right, because you're going to be very limited as a fix and flipper on how much you can actually get in terms of return. If you're using other people's money, they're giving you a cut. All right, wholesalers make let's say $5,000 on a big transaction, $1,500 on most transactions, and because all they're doing is they're facilitating locating the deal, finding it in the market, and then having someone else take advantage of it with their money. And if they're doing their own money, right, then let's say they've got 60 grand to put into it, and they actually pull out, so around 100% annual return. Honestly, Carrying Horn, okay, those are like market extremes. I consider myself a successful day trader, averaging 18 to 24% return on invested capital. But I am investing more capital, and I'm being a lot more cautious with my trades. But if you start with $5,000 and this is free money to you, yeah, you can pull 100% return in swing trading in a year. But you've got to be more aggressive with your trades. Palantir, I moved into. Tesla, I moved into hypothetically. I have other trades that I will do. Every once in a while, you come up with a trade. Like I'm watching Walgreens pretty close. I'm very interested in moving into that trade. You'll find a trade that you perceive as a lower potential risk with a relatively high reward, and you'll double down on that, and that will increase your overall net returns. Okay, but if you're dealing with a portfolio that's starting to get up to 50, 60, 100,000, you need to start backing off of that level of aggression, because a loss, let's say you take a 30% loss on your $5,000, well, that's $3,500, so $1,500 loss. So $3,500, you still have $3,500 of capital, and you can still invest that. But that same 30% loss on 100,000, that's 30 grand. That's going to hurt. So it scales up, whereas you lower your amount of exposed risk, the more money you have. Again, unless you're solely investing this for income, right? 100,000, if you are really convicted on a trade and you've got a 20% upside, okay, and this is a week-long trade maybe, then that's 20 grand in a week. And if you multiply that out and say you're able to pull that 20 grand off 5, 8, 9 times in a year, you're looking at 100,000 or more as your overall net for the end of the year. And again, you're doing this with the mindset of income. Okay, you can level that out and not be as aggressive on the 100,000 and make a comfortable living swing trading of 50, 60,000, 80,000 in a year by just allowing yourself to capture these 5, 7, 12% moves. You don't have to hit it out of the park on every trade. And that's the mentality of swing trading. Again, it is still income, but you're also hoping for wealth building. All right. So after you exceed your income needs for the year, after you get your 80,000 or 70,000, whatever you have to live off of, remember you're paying taxes from that. You want to take the excess and set that aside for wealth building. Okay. And here for a day trader, right? The problem is most day traders love the life. Okay. The mentality for day traders and real estate brokers is very different. All right. They like to live life on the fast lane. They want to spend the excess money they get. All right. It's not a wealth building mindset. It takes a very different type of person to be a successful day trader. I've done it. I know what that felt like. I liked it, but that's not who I am at my core. And so I switched over to swing trading. I want income. That is my primary goal, but I'm also hoping for the opportunity to build wealth. And that's where the main difference is between day traders and swing traders. Slotus says up 8% this month overall, using around 10% of the portfolio per trade, 10% loss risk per trade, so only 1% of portfolios risked per trade. Yeah, those are the type of strategies that are required, and we've talked about bankroll management, and we'll probably talk about it again soon. But bankroll management is highly important for both of these options. Okay, if you're doing it yourself, or you're using someone else's money, a lot of times if you're in a prop firm, they're going to have requirements that you follow specific bankroll management stuff. So all of that is very important. So yes. And then of course, controlling your emotions. We talk about that too. Do not trade emotionally. It's bad business. All right. Next step in this analogy here. So again, the first two, goal is income. Okay, as a day trader, real estate broker, maybe your hope is to build a sustainable business / income flow. Okay, that is the general end game when you're a day trader. All right, if you can successfully day trade and you can get people out and grow in that realm, that is the ultimate goal at the end of the day. But you've got to realize that this is very much a live by the sword, die by the sword world. You will face burnout multiple times in your career, both as a real estate broker and as a day trader. It's just natural cycle, right? We can only do things with a high level of discipline for so long. All right, you will find very few people who have lived their entire lives with a strong discipline structure. It's not human nature. But as you build up, as you get better, as you can hopefully recruit and build an actual business, it then becomes sustainable without your direct influence on a daily basis. But at the beginning, it's 100% you in both realms. Swing trader, fix and flip, this is a lot more passive. Okay, this is actually accessible to you if you want to commit as a part-time business or endeavor. Okay, this you will never be successful as part-time. Okay, everybody will tell you you can do it part-time, and you might have some success here and there part-time, but it's not replicatable and it's not sustainable until you commit and go full-time. Down here on the swing trading aspect, this is accessible part-time. Okay, I traded as a swing trader for years part-time passively. Okay, and I was pulling 18 to 24% as my mean. High side 36%, best year. Low side 12%, 8% I think was my lowest year ever in passive investing. Okay, swing trading, fix and flip, you can do that. Right, that's accessible to you. Goal is still income, and you hope for wealth building. Okay, so if you're working full-time, you've got a full-time job, then my guidance is start with swing trading, get comfortable with the concepts. As you build up your wealth portfolio, if you have enough and if you have proven disciplines, consider moving into the day trader realm. Okay, because again, potential on both of these is pretty high, but realistically, this is easier to build into a business than this. Okay, annual reviews, portfolio managing. So this comes to play for both stock investors and real estate investors once you've actually established a wealth portfolio. So in real estate, if you've got 2 or 3 or 4 properties, then you fall into this realm. In stocks, if you've got 100,000, 200,000, that's the point when you should start looking at your annual reviews. Okay, if you've got less than that, annual reviews mean very little to you. Okay, I do push and I do say that you should revisit your foundation for stock portfolio. So as an example, you've got a 401k, you got 50,000 in it after the last 3 or 4 years, and it's all in just whatever managed fund you are given. That's fine, okay, but you can do better. All right, so everybody, regardless of what's going on, should look at their portfolio on an occasion to decide, can I lower my fees? Can I increase my potential return? And that's what the annual review is. So your goal is to, okay, that's what you want to do. So can you cut fees? If you've got a real estate portfolio, okay, do you have one that is proven consistently hard to get rented out? Get rid of it. Find a different property. Or maybe find some way to improve it. Okay, with your stock portfolio, do you have a company that was paying a dividend and then decided to cut the dividend? So now they're not paying as much as they were when you first got in. If you've got a managed fund, how much are you paying to have that fund managed? Okay, those are the things that you're thinking of in your overall review. But this is the key to wealth building. Okay, your time commitment on this, you should be willing to spend at least a couple of weeks worth of work on once you get up to that point. Okay, look at the market, look at what's going on, look at what you have, and decide, okay, did I have an investment that went from $10 to $40? Okay, well, I just got 4x or 3x my money returned to me. Do I need to take some of that off and find a new investment? Because the reality is, just because it hopped up that much doesn't mean it's sustainable, and it doesn't mean that it's going to happen again. Okay, so you've got to be very disciplined and think like an accountant. Okay, everything's calculated, everything's weighted in terms of value versus risk and reward and return, and think in those aspects and say, okay, can I justify this investment? Do I think that it's really worth something? Yes or no? And if it's not, move on to the next. All right. And this is really kind of where I think everybody should shoot to get for, because once you're able to do this on an annual basis, now you're looking at really the long-term investing outlook. Okay. Now you're reviewing stocks for real wealth building. Preservation and building. Now here, you hope for income. All right, and this is flipped on its head. You're not hoping for income here and to build wealth management, because that's not realistic and that's not aligned. Down here, however, you want to preserve your wealth, you want to build that wealth, and you're hoping that you can leverage it to a position of sustainable income. Because even here, you should be looking at reinvesting excess. So the reinvestment of excess is key in your portfolio management and building, but now you've got a long-term outlook. Now you're looking at stocks and you're saying, okay, Walgreens is an example, since we're talking about it today. I see that you're at $37. My assessment is that I think Walgreens should be able to hit a price of forward earnings. So 15 divided by 7.38 is 2.03. So 37, 2.03 is $75. I'll break down from a valuation standpoint. I'm going off of their forward PE. So this is the expectation price versus earnings for next year from the company. And what I did was an average fair valuation in the market for a company like Walgreens should be about 15 times earnings. Okay, that's close to the S&P median. Most finance books you look at say that that's the overall valuation target. So what I did was I divided it by the 7.38, which is their projection, and that means that 15 is 2.03 times more than the 738. So I take the current price of 37 and I say times 37.39, and that gives me a price target of $75.99. I think Walgreens, you're worth $75 as an investment. I'm going to invest in that, and I'm going to hold it no matter how long it takes. And to boot, I get a lucky little side bonus here. There's your hope for income of a 4.89% dividend. Okay? You're not hoping for just that move to obtain. Okay? You want the sustainable income, you want that target, and you also want the increase in value. And when you move into the realm of actual wealth building, long-term investing, then what you're getting is income, you're getting legacy. Maybe you've got something that you can actually allow to go to the next generation in the form of inheritance. But this type of thing takes a lifetime to build, okay? I'm not buying Walgreens with a 1-year target or a 2-year target. I'm buying it. I'm spending $100,000. I'm spending $1 million on Walgreens, and I'm saying I'm going to lock in, hopefully, this dividend. I think that the discipline of Walgreens is able to sustain that, and I've got good growth prospects. So maybe that million turns into 2, but just because it doubles, I don't care, because I'm still maintaining this, and I still think that long term Walgreens will be able to increase in value. So on a real estate portfolio, what that looks like is an apartment complex. Okay, it's not cheap to get into an apartment complex. You're not buying an apartment complex with the hopes of going in and maybe fixing the plumbing issues and then selling the property. No, you bought it because you expect that long term it is going to increase in value. You understand that it's going to have a little bit of maintenance costs, etc., but you're confident that the income will far outweigh that expense. And again, your goal is to get that mortgage paid off, so no longer is it financed, and now it's 100% income generating or increasing. So there you go. Pinions, yes, that is my portfolio. That is my current holdings as of today. I update that every day before stream, but because I'm a swing trader, it stays in long periods of time of being the same snapshot. Although, because we're all on stream, and I just sold myself with next year's projections. We're 100% moving into a position here on the hypothetical, because my real cash is tapped out right now on Walgreens. What are we at? 37, 35. All right, real quick before I do this trade, because I'm going to, I need to know, is there any questions on today's topic? Does it make sense kind of how I broke it down? Yes, hypothetical is paper trading, Caringorn. Because I ran out of real dollars investing in Palantir. I mean, I've got a few left over, but I have minimums to be able to, that I set for myself to actually move into trades, because I'm doing cash secured puts this year. So I just don't have enough cash to throw at it. Handpans, which has the largest profit potential long term? 100% it's the long-term investor. Because that's where wealth building, that's where empires are built. This is Warren Buffett type wealth. This, you can get famous. You can be you can be like a reality TV star. But you're going to leave your kids, I don't know, maybe $100,000 inheritance. Maybe you do leave them the business that you built, but they don't know how to run it, so it collapses. This doesn't require somebody to be smart enough to run your business. That is money for your grandkids, your great-grandkids, and so forth. So 100% long-term should be everybody's goal to get to.